you can just revise what has been done in class till now. Yes.
Sure.
Yeah.
So there is first day இது பண்ணட்டுமா or the salary starting
Yeah, from starting 15 then.
Okay. So income from salary, the covering sections are section 15, 16 and 17. Whereas 15 talks about the charging section, whereas 16 is deduction and 17 is definition. Whereas 15 comprises of 15A, B and C. Whereas 15A is any salary due to the employee from the employer or former employer during the previous year, whether it's paid or not. Whereas 15B is any salary received from that employer or former employer, which is not due to them. And in 15B, whether due or receipt, whichever is earlier should be taxed. In 15C, arrears of salary, that is on receipt payments is only 15C is 15C will comes irrespective respective of the previous year, it is not due to him. The important points are there should be an employer-employee relationship, and advance salary is taxable. Advance against salary, that is if the employee received any some amount from their employer as a loan means, then it's not being taxable. And mainly for government employees, whether pay commission received salary retrospectively will be taxable. And then we saw about some 2-3 examples. Then 17.1, that salary includes wages, any gratuity, any annuity or pension, any gratuity, and then any fees, commission, perks, and profits in lieu of or in addition, any payment received from the employer. Then we saw 2-3 issues.
Sudarshan?
Yeah.
டக்குன்னு அப்படியே இது எடுத்து.
So அது எப்படி எக்ஸ்பிளைன் பண்றதுன்னு சொல்லிட்டு.
Okay, take your time, not an issue.
So Swiggy and Zomato are paying paying to the delivery partners, whether it's taxable under salary. No, the answer is no, because there is a contract between the Swiggy and Zomato to the delivery partners, and the delivery partners only paying to the there is lower level staff only. So there should not be a direct relation of employer-employee between the delivery partners and Swiggy. So it is not taxable under salary. And then if any arrears of salary is not at all received for which he has been taxed in the previous year means, then according to that Gujarat judgment, it can be claimed as a deduction. And third one is whether any government employees or voluntary paying anything to the PM cash by the government employer itself means, then those can also be comes under the heads of salary, and later it can be claimed as a deduction under section 80G as the PM cash donation is comes under 80G. And then payment by a company to its directors. So here if two types of, based on the types of directors, the salary part is taxable or not will be judged. And so the non-executive or independent directors will not be comes under the heads of salary, whereas the executive directors, if they comes under the payroll means, and then they can be taxable under heads of salary. And then when it comes to firm means, anything received from the anything received by the partners or partner by the from the firm means, then it should not be taxed under the heads of salary, as it is being charged under the professional business or professional gain only. So Largely, we saw about the three major topics in salary. There is allowances, rent receipts, and perks. Whereas we saw about the allowances in allowances we saw the house rent allowances section covering the section 1013A. There are three conditions basically for the HRA calculation, which is HRA actually received in the relevant period, and then second one is rent paid minus 10% of the salary in the relevant period. C 40% of salary for the relevant period. 40 and 50 is basically depends upon the city in which the employee resides. And then we saw about 2-3 questions and all we solved it.
Yes. Question solve பண்ணோம். Okay, அதுல என்ன specific points எதனா கத்துண்டோமா questionsல?
So first question வந்து the rent paid and for HRA calculation, we need to be considered the we need to consider the three conditions to calculate the HRA. We need to consider the relevant period on which the rent paid and the HRA amount we claimed and the salary also. If there is an increase or decrease in the salary in between the HRA amount received and all, no, then that should be alone has been calculated separately because it will affect the HRA calculation as a net of amount. So that's the one thing.
Okay. So it was good work, Sudarshan, right? So, but only one question that flow மட்டும் இன்னும் கொஞ்சம் develop பண்ணிப்போம் because as far as the flow is concerned, right? See, the chapter of salary does not have much to do with the interpretation, as has been already discussed in the first class. It does not have much things to be done with the interpretations. It is more about a memory game, right? So, how much ever fast you are able to recall in the examination, so you'll be easy to score that 8 to 10 marks, whatever is being asked in the examination. So that is the only point, right? So for this point in time, this is a very good work. But for examination, you should just develop the timings. அவ்வளவுதான். மத்தபடி வேற எதுவுமே இல்லை. Provisions, அதோட understanding எல்லாமே perfect. சும்மா இப்படின்னா அப்படி வரணும். That's the only point, right?
I don't know how to summarize the whole thing.
Yeah. It will take time. I understand it will take time. அதான் நான் சொல்லிட்டேன். இப்போதைக்கு இதுதான் best work. This is the best which can be done. But for the examination, this might not be enough. So you should just develop yourself for the examination. For now, it is fine. Okay. இப்போதைக்கு இவ்வளவுதான் பண்ண முடியும் because you've just dealt with the chapter for 2 days. It is not fair on our part to expect something more than this, right? So அதனால இப்போதைக்கு இவ்வளவுதான் மேக்ஸிமம் பண்ணவே முடியும் நம்மளால. Just give me a minute. I have some problem with my video. Just give me a couple of minutes alone. So hope the screen is also visible. So in the previous class, we were discussing about, we just started with section 15. We completed section 15. And we just came to the first part of the exemptions, which is HRA exemptions. After HRA exemptions, we just basically touched upon the chapter of part of allowances, which has been beautifully summarized by Sudarshan. And now we are going to the second part. So if you just remember here, going back to our chapter discussions. So as far as this is concerned, this is done. So now we are going to take up the part of retirement benefits today. And for tomorrow, we'll take up perquisites and we'll close it up. So that is the plan. So as far as today is concerned, we'll go for the retirement benefits. So if you just see the retirement benefits, generally, apart from the normal amounts which is being received by the employee year on year, at the time of retirement, he gets a lump sum payment by various names, right? For the service which has been done by him for the past 30 years or 40 years, as the case may be, a service for his service, the employer, either the government or the non-government, gives them some huge amount because after that time they could not earn a substantial amount. So if at all they are into the scheme of pension, they might earn something as pension. If not, that could also not be earned, right? So for the service which has been done, so they just pay some amount by different names, which is either required by a statute or not required by a statute, as the case may be. So just the payments are made. Of many retirement benefits which is available, some points which is required for us to understand or for us to for which there are tax benefits. The retirement benefits can be broadly classified into 6 categories. First one is pension, gratuity, leave encashment, provident fund, retrenchment compensation, and voluntary VRS payments. So totally 6 things. First one is pension, second one is gratuity, third one is leave encashment, fourth one is provident fund, fifth one is retrenchment compensation, and sixth one is voluntary retirement receipts. Basically, the amount which is being received by the employee for him giving the VRS is known as voluntary retirement receipts, right? So if you just see this part of the chapter, right, generally they just tell you what amount is exempt. They'll just give you some 3 or 4 items. List of the following will be exempt. The remaining amount will be taxable. So that is how this part of the chapter will go. As far as this part of the chapter is concerned, as already been said, the entire salary chapter, the mark scoring areas is more about remembrance part. So the first part, at least till HRE, right, there was some point of understanding. So we just had to discuss few points. Only then we'll be able to get a grip of it. But this part which we are going to discuss today does not entail much amount of discussion. Rather, it involves some time in solving the problems and summarizing and comprehending the provisions which we are learning here and there, right? So what I have planned for this class is, so we'll take up, assume for example, if you are taking pension, we'll start from section 15 till pension. If you are taking gratuity, we'll start from section 15 till gratuity. So if you're just going for leave encashment, from 15 till leave encashment, we'll just keep solving problems this way. So that by the end, by the fair end of completing these 6 things, we'll be having a hold in class itself for both 15 for the first part and second part. So it will be like we'll be just be adding things to the problems, and that is how the problems are going to move on, right? So now we'll just go to the first retirement benefit, which is pension. See, basically, what do you mean by pension means any amount which is paid by the employer to the employee after him completing the service in exchange for a service which has been done for the past 30 or 40 years. Assume, for example, there is an employee, right? So he is in employment somewhere around, he just entered in 22 or 24 or 20 as the case may be, and he was there till 60. So he was there for 40 years. He just fought hard for the company, right? But after 60, the system chucks him out of the um, employment for one simple reason, that the younger generation should be given opportunities, right? So what will happen is, for him to earn his living for rest of his life, there will be some amount which could be paid by the employer, either by the employer or from his amount which has been contributed to him. That is called as new pension scheme. I'm not touching so much on that new pension scheme. So we'll just take up a pension. The amount which is received by the employee from NPS will also be treated in the same way only, right? But what is the difference between the old pension scheme and the new pension scheme? If the amount is contributed, that does not make any difference in relation to its taxation. If the amount is received as pension, this is the tax treatment. I'll just stop it there. If at all there is a requirement in future, or if you have some extra time, we'll just discuss the differences between the new scheme and an old scheme of pension, which was introduced somewhere in 2002, 2003. And should there be some revisions in this provisions? So I'm not touching upon those points, right? Coming back to our discussion. So as far as pension is concerned, there cannot be a way there that the pension is received at the time when the employee is in service. If the employee receives something when he is in service, that is known as salary or wages, as the case may be, but it cannot be termed as pension. So basically the pension's taxability can be broadly divided into two parts. First one is commuted pension, next one is uncommuted pension. What is commuted pension? See, from 60, assume till somewhere around 80, 85 years, the employee is entitled to receive months on month amount from a month on month, similar to salary from his employer. So from the date of his retirement till the date of his death, the employee is entitled to receive monthly payments for earning his monthly living. But what I say to my employer is, employer, see, even though like I'm there for 30 years or 20 years or 25 years, I don't have belief in you because I've been out of your employment. Someday you may come back and say that I'm not eligible for pension. So what you do is, whatever is my entire pension amount, give me the entire pension today, as on the date of retirement. That is known as commutation. So basically what this commutation means is receiving some amount or whole of his pension for the remaining period of his life on the day of his retirement itself. That is known as commuted pension. Then what do you mean by uncommuted pension? The pension which is received on a monthly basis is known as uncommuted pension. Let me put it again. The amount of pension which is received on the day of his retirement is known as commuted pension. Okay. Uncommuted pension means the pension which is received on a monthly or yearly basis, as the case may be, is known as uncommuted pension. As far as uncommuted pension is concerned, the entire uncommuted pension is taxable in the year in which it is received. So basically the provisions of section 15 will apply, and based on that its taxability will be determined. Right. So the uncommuted pension part is done. Now we'll go to the commuted pension part. As far as commuted pension is concerned, the treatment for government employees and non-government employees are different. Right. So as far as government employees are concerned, the entire amount of commuted pension which is received by a government employee is fully exempt from tax. The entire amount of commuted pension which is received by a government employee is fully exempt from tax. But if at all he is a non-government employee, then its taxability is based on whether such person is receiving gratuity or he is not receiving gratuity. Right. So if at all he is in receipt of gratuity, the one third of the commuted pension divided by percentage of commutation. What do you mean by percentage of commutation, Karthik? See, assume for example, if I am just eligible for 50,000 of pension month on month, I'm just discounting that entire 50,000 somewhere around 80 to 85 years based on the estimated life. So the value comes to somewhere, the value as on today for the entire pension payments, which is to be made periodically, comes to somewhere around 40 lakhs, 50 lakhs. So what I say is, of that 40 or 50 lakhs, I will just take it for an example. 50 lakhs is the entire cash value of the pension today. Of which what I say to my employer is, employer, even though there is 50 lakhs, what you do is you give me 60% of it today. The remaining 40%, what I'll do is I'll get it from you month on month. That 60% which I am receiving today is known as the commuted pension. Right. So one third of the commuted pension divided by the percentage of commutation is exempt. So basically the remaining amount is taxable if I am in receipt of gratuity. If I have not received gratuity, the formula just changes itself. Instead of 1 by 3, 1 by 2 will come. 1 by 2 into commuted pension divided by percentage of commutation. Right? So that is in relation to pension. Let me put it again, the provisions in relation to pension. In relation to pension, the uncommuted pension is entirely taxable in the period in which it is received. If at all the pension is commuted, that is, it is received on the day when the employee is retiring. If at all he is a government employee, the commuted pension is fully exempt. If at all he is a non-government employee, then we should check if he is receiving gratuity. If he is receiving gratuity, 1/3 of commuted pension divided by percentage of commutation is exempt. If he is not receiving gratuity, then half of the commuted pension divided by percentage of commutation is exempt. Right? So is this clear?
Yes, sir.
Super.
Sir.
Abba டக்குன்னு திரும்ப சொல்லு பார்க்கலாம்.
Sir.
Yeah.
Can you just tell me that why 1 by 3 and 1 by 2 and why, what is the derivation of that formula?
So basically 1 by 3 and 1 by 2 is given by the Act. So if you just want to know why it is given, maybe you could just go and ask the Nirmala Sitharaman. But there is no logics for the numbers which is given here. So whatever is the number which is given in the Act, we are just taking that number. Right? As I've already said, as far as the chapter of salary is concerned, there is nothing to, there is no logics for many things. I'll just come to the other thing. See, what is the difference between a government employee and non-government employee, and why should they be treated different? If you are just going to put me a question of why 1 by 3 if he has received gratuity and 1 by 2 if he has not received gratuity, I am putting you back a simple question. If what is that? If at all I am employed by government, whatever is received by me is exempt. If at all I am not employed by government, it is not fully exempt. What mistake did I as a taxpayer do here? Why am I being treated differently here? Do you have an answer for it? So that is a bigger problem than what is 1 by 3 and 1 by 2. Right. So basically, let us not dwell deep into the logics of it, because as far as the chapter is concerned, the nature of the chapter is in such a way that whatever is given, we have to understand it and implement it. That's it. So for many numbers here, there are no logics. Okay.
Sir, and that percentage of computation, will it be given, sir?
Yeah, it will be given in the question. So that is what we are going to do now. We'll just take a question on gratuity now. So sorry, pension now. Yeah. So after Sri Priya revises the provisions in relation to pension, we'll just take it up.
Yes, sir.
Yeah.
So first, under the retirement benefits, we saw about the pension.
Okay.
So pension means any amount that is paid by the employer to the employee for the service done by the employee in the past.
Okay.
So this is given because after the retirement, they will not be earning any substantial amount of income. So in order to compensate it, it is given for the past service which was done earlier. So pension is classified into two categories: commuted pension and commuted pension. So commuted pension is pension received on the date of retirement. So the entire amount of pension is received on the date of retirement. So under the commuted pension, the taxability is different for the government employee and the non-government employee. For the government employee, the entire amount received on the date of retirement is not taxable. For the non-government employee, again, there is two classification. If the employee receives gratuity, the amount taxable will be 1/3 of the commuted pension divided by the percentage of commutation. If the person does not receive gratuity, it would be half of the 1 by 2 into commuted pension divided by percentage of commutation. And then uncommuted pension. So uncommuted pension means the pension is received on a monthly or a yearly basis. So under the uncommuted pension, the entire amount is taxable in the year whenever it is received.
Okay.
Yes.
Yeah. So we'll just take up a quick question in this regard, right? Yes, is the question visible?
Yes.
Yeah. Can you just read it out?
Yes.
Yeah.
Mr. Arumugam has been in employment for past 33 years. During the year 2022 to 23, he has attained the age of 60 and is retired from his employment in the month of November 2022. His last drawn salary was 1.8 lakhs per month. He was eligible for 75,000 per month as pension and has commuted 70% of his pension, which comes to 45 lakhs. Compute the income taxable under the head salary if he is a government employee, if he is a non-government employee.
Yeah. Can you just solve it out?
Yes.
Yeah. Hmm. Yeah.
This gratuity is the exemption, right?
No, no, no. If he has not received gratuity, then the amount of half will be changed. அவ்வளவுதான். Gratuity exemption நம்ம இன்னும் போகவில்லை. We have not touched upon the exemptions on gratuity.
Yes.
Here, to determine the amount of exemption, what you should check is whether he has received gratuity or not. Right. If he has received gratuity, then 1/3 should be taken. If he has not received gratuity, 1/2 should be taken. That's it. See, as far as the amount of gratuity exemption is concerned, we'll just take it up further. So, நம்மளோட next discussion gratuity இருக்கும். Okay?
Yes.
Is it clear? Yeah. Just take the answer. Shall we solve one more question in this itself and then go to the next one?
Yes, sir.
Yes. Reshma, read the question.
Sir, question is not visible, sir.
Oh, okay. Yeah.
Yes, sir. Mr. Shanmugam has been in employment for past 33 years. During the year 22-23, he has attained the age of 60 and is retired from his employment on 1st of July 2022. His last drawn salary was 1.8 lakhs per month. He was eligible for 75,000 per month as pension and has commuted 70% of his pension in the month of August, which comes to 45 lakhs, since he moved abroad to his daughter's residence in UK. Compute the income taxable under the head salary if he has not received any gratuity. Case 1, if he is a government employee. Case 2, if he is a non-government employee. Would your answer be different if he has received gratuity at the time of his retirement?
This one I'll change. Okay. No. Let this be here. We'll just take that as a separate question. Yes. Solve this question first. Yeah. So what is the answer which you're getting?
1 minute.
Yes.
So,
Yes.
sir, 1A, I'm getting 5,17,000 pounds.
1A. How much?
5,17,500.
17,500. Okay.
So,
Yes.
for B, I'm getting 18 lakh 3,215.
1B. How much? 18 lakhs?
3,215.
Okay.
2A, same 5,17,500.
Okay. Okay. 2B?
2B, 28,74,643.
6. Okay. Some other answers? Sudarshan.
No.
என்ன ஆன்சரு ஆன்சரே சொல்ல மாட்டியே
It's okay. It's okay.
working out. Okay, not an issue. So one word of caution, as I've already said, see, since the person is living outside outside India, right? So we should check his residential status before determining the income which is taxable in India. Correct? So if at all he is a resident, the amounts which is taxable in India will be different. If he is a non-resident, the amounts which is taxable in India will be different. So if you just take section 3, which specifically deals with the amount which is accruing or arising in India. So it is 912 or 913 only. I'll just give you the sections also. So if you just go and see those sections, right, 912 and 913 will be for income which is deemed to accrue or arise in India. So if the income is for the services which is rendered in India, it will be taxable in India, right? If the income which is falling under the head salaries is for the services rendered in India, then it will be taxable in India. However, if the income is chargeable under the head salaries, it is payable by the government. So basically, if the government is going to pay some amount for services which is rendered outside India, that amount is also taxable in India. Let me put it again. In case of salaries, if the income is earned in India, that amount is taxable in India. If the income is salary is for the services which is rendered in India, it is taxable in India. This is what 912 says. As far as 913 is concerned, if the government is going to make payment for services rendered outside India, if the government is going to make salary payments for services rendered outside India, then it is deemed to accrue or arise in India and it is taxable in India. Right. So in this case, what is his residential status first? What is his residential status?
Indian only, sir.
Yeah.
He is resident, ordinarily resident, sir.
How?
33 years he's been in India only.
Okay.
That's why I think I'm assuming.
That's why?
That's why I'm assuming that he is ordinarily resident.
No, don't assume here. There are separate sections, right? Section 6.1 and 6.6. So residential status is done for you, right? Already?
Yes, sir. 1 second. Sir.
Then why are you assuming him to be a resident?
No, sir. 1 second.
So what is the conditions given in 6.1?
182 days or more.
182 days or more. Okay. What is the other condition? This is first condition. Next.
60 days or more in the previous year and 365 days or more in the preceding.
More in the previous year and 365 days or more in the preceding 4 previous years. Correct? So there are some exceptions to this. Are there? Are there some exceptions to this?
Yes, sir.
Yeah. What are those exceptions?
Sir, if the person, if the individual moves out of India.
I didn't get you.
If the individual moves out of India for the employment purposes,
Okay.
second condition 60 days will be replaced with 182 days.
So he is not going outside India for employment, correct?
Yes, sir.
So that condition is that exception is ruled out. What are the other two exceptions?
He leaves as a member of the ship.
Okay, that condition is also not satisfied. What is the third one?
Indian citizen or person of Indian origin visits India.
That is also not satisfied, correct?
Yes, sir.
So basically, these are the two conditions. So in this, he falls under the second condition. 60 days or more in the previous year, 365 days or more in the preceding 4 previous year. Hence, R and OR. Hence, global income is taxable. Correct?
Yes, sir.
Now we'll go to the solving the problem. So first, he has not received a gratuity. So on till 1st June, he was in employment, correct?
Yes,
so basically, for how many months would he have been getting the April and May, 2 months, right? Correct?
Yes, sir.
April and May, 2 months. Next, he was eligible for 75,000 as pension, and he has commuted 70% of it on 1st of August. So for June month and July month, August. So basically, he would have received. So for June, he would have received it in July. For July, he would have received it in August. Correct. So for 2 months, he would have received 75,000. So the uncommuted pension part, I'll put it here. 2 months, he would have received 75,000. Correct. Then from September, so basically April and May, he would have received his salary. So he has retired himself on June. So for the April months, April he would have received a salary. May he would have received a salary. And then for the month of June, he would have received the pension. For the month of July, he would have received the pension, which should actually be on August. Then from August, he'll be receiving it, right? Let's put it here. 2 months salary. April and May salary. 2 months. Then June and July, 2 months. Full pension. Correct?
Sir, what about August, September, and all?
Yes. Coming here, don't fight with me. I'm just coming to that. August to March. Part pension. So which will basically be for 8 months. Correct? So April and May is done. So June and July, 75,000 into 2. Correct? Then from August to March, 75,000 into 30% into 8 months. So this will be the value of uncommuted pension. Correct? Some doubts on this?
Sir.
Yeah. So next is the commuted pension, which is 45 lakhs. So you'll just get this out. Since he is a government employee, the entire amount is exempted. The salary taxable is 6.9 lakhs. Hello.
Sir?
Hello.
Sir,
Yeah. Is the answer clear?
sir, I have a doubt in the commuted pension.
Commuted. Okay.
Sir, August to March 8 months. அது புரிஞ்சது சார். ஜூன் அண்ட் ஜூலை வந்து ஏன் ஃபுல் பென்ஷன் விட்டீங்க சார்?
See, April, May, he is in employment, correct?
Yes.
So for June and July months, he has not commuted his pension. So June month or pension is not commuted. For June month, he'll be receiving it on 1st July, correct? So that pension is not commuted. For July month also, it is not commuted. Only in the month of August, he is commuting it.
Yes.
See, basically, what do you mean by commutation? Receiving the months of the months which is going to fall after this, I'm going to receive that pension today. Is that the definition of commuted pension?
Yes.
So பின்னாடி வாங்க போற பென்ஷனை நான் முன்னாடியே வாங்கிட்டேன்னா அதுக்கு பேர் commuted.
சார் பட் அந்த கம்யூட்டேஷன் வந்து ரிட்டையர்மெண்ட் அன்னைக்கு நடக்காதா?
என்னைக்கு வேணா எடுத்து நிடலாம். So that is the point which has actually been tried here. It is not necessary that it should be taken only on the date of retirement.
Yes.
So but இந்த இடத்துல நமக்கு ஒரே ஒரு பாயிண்ட் மட்டும் வரும். The if at all you are just going to take it for the government employees, there is a stand that only if it is received at the time of retirement, it is fully exempt. Commuted pension. Okay, wow. So but what we are taking is, since it is in the same year, I'm just taking it to be exempt. Is my point clear?
Yes.
Yeah.
Sir, if
Yeah.
I understood that it's not taking, we are not calculating from the date of retiring, sir. But what did we do with those 2 months, sir?
Which 2 months here?
Like June and July, sir.
June and July full pension.
So it will
75,000.
come. June and July will come under uncommuted pension, sir.
Yeah, it will come under uncommuted full pension.
Okay, only 30%, okay?
No, there is no 30% because the pension is not commuted there, right?
I didn't get it.
You are not getting it.
No, like in the previous sum, we did 30%, sir. Why not in this one?
Because in previous sum, the pension was commuted on the day of retirement. Here it is not commuted on the day of retirement.
Oh, okay.
Clear?
But for the rest of the months, uncommuted pension should be calculated.
Yeah, 30%. That is here. 75,000 into 30% into 8 months.
Right, sir. Understood, sir. Nice.
Super. Okay, clear?
So,
Okay. We'll just go to the next part. So if he has not received gratuity and he is a non-government employee. So the salary part is going to be the same. Salary and commuted pension, all these amounts are going to be same. I'll just take this one. Structure. Salary is 3.6, uncommuted it is 3.3, commuted pension 45 lakhs, and we should just go for this amount alone. So it is just 45 half of the amount of the commuted pension divided by percentage of commutation, right? The amount exempt would be 32 lakhs 14,286, and the amount of salary which is taxable will be 19 lakhs 75,714. If he has not received gratuity and he is a non-government employee. So it is going to take it up for has received gratuity and he is a government employee. The computation is going to be the same. Since he is a government employee, it does not make a difference whether he has received gratuity or not. The entire amount is exempt from tax. So 6.9 lakhs is the amount taxable, same as point A. So next is the fourth point. So it is 1/3 of the commuted pension divided by the commutation percentage. This amount is exempt from tax. So basically the amount of salary which is taxable is 30 lakhs 47,143. Clear? Yes? Hello?
yes, sir.
Puriyarda?
Yes, sir.
Yes, sir.
Super. I'll just give you the answers here. Shall we go to the next part now? Is the provisions related to pension clear?
Yes.
Yes,
sir.
Now we'll go for provisions in relation to gratuity, right? So as far as gratuity is concerned, so what is first gratuity? Does someone have an idea of what is gratuity? Yes? What do you mean by gratuity? So what is gratuity actually? Does someone have an idea? Sudarshan? Okay. So basically, gratuity is the amount which is given at the time of, basically at the time of his retirement for his services which he has rendered to the company. As a gratitude for his services to the company, the employer will be paying some amount to the employee. That amount is known as gratuity. As far as gratuity today is concerned, gratuity is governed by Payment of Gratuities Act, and every entity which is going to have 10 or more employees are required to register themselves under, are required to contribute some amount to gratuity fund. So that is from the employer's angle. From the employee's angle, see the amount which is the amount will generally be receivable at the time of his death or retirement. Okay, but if at all the amount is received at the time when he is in service due to some reason, then it is taxable irrespective of whether he is a government employee or a non-government employee, right? So gratuity is a payment which is made by the employer to his employee as a gratitude for his services which is rendered by him to the company. It will be a wholesome payment. It will not be a month-on-month payment like pensions. Okay, well, so this amount of gratuity, generally the taxability defines itself whether it is received during the service or it is at the time of death or retirement. If it is during the service, it is taxable for all the employees, irrespective of whether he is a government employee or a non-government employee. However, if at all it is received at the time of his death or retirement, as far as gratuity is concerned, if he is a government employee, the amount is fully exempt from tax. Let me put it again. Gratuity, which is received during the service, is taxable for all the employees, irrespective of whether he is a government employee or a non-government employee. However, in case of, if it is received at the time of his death or retirement, if he is a government employee, the entire amount of gratuity which is received by him is fully exempt from tax. Right? If he is not a government employee, then the determination of the amount which is exempt from tax is found out by finding whether he is covered by Payment of Gratuities Act or is not covered by Payment of Gratuities Act. So if an employee is covered by Payment of Gratuities Act, list of the following amounts will be exempt. First is the gratuity received, then 20 lakhs, then 15 days salary based on last done salary for every completed year of service or part thereof in excess of 6 months. Let me repeat it again. If the employee is a government employee, the entire amount of gratuity which is received by him at the time of his death or retirement is exempt from tax. However, if he is not a government employee, the taxability is determined based on whether he is covered by the Payments of Gratuity Act or he is not covered by the Payments of Gratuities Act. If the employee is covered by the Payments of Gratuity Act, list of the following amounts will be exempt. First is gratuity received. So basically the exemption should not exceed the amount of gratuity which is received. That is the reason everywhere it will, if you just see list, this amount will come, gratuity received. Second is 20 lakhs. Third is 15 days salary for every completed year of service or part thereof in excess of 6 months, which basically means 15 days into number of years of service. 15 days salary into number of years of service. If you just want, the first point is the list of the exempt will be, list of the following will be exempt. The first is the amount of gratuity which is received. Second is 20 lakhs. Both of these are straightforward. As far as point C is concerned, what we can do is 15 by 26 into last drawn salary into every completed year of service or part thereof. Right. For this point, this formula would be 15 by 26 into last drawn salary into every completed year of service or part thereof. If at all it is going to be more than 6 months, assume it to be a year. That's it. So that is for if he is covered by Payments of Gratuities Act. If he is not covered by Payment of Gratuities Act, the first amount is same, gratuity received. The second amount is also same, it is 20 lakhs. However, if you just see the amount C, it is half a month's salary for every year of service based on average of past 10 months salary. Here it will be half a month's salary for every year of service, every completed year of service alone. it will not include for our part thereof. So basically, if he has worked for 27 years and 8 months, if he is not covered by payment of gratuities act, it will be taken as 28. However, if he is not covered by payment of gratuities act, it will be taken as 27. Right. So this is the difference between if he is covered by payment of gratuities act or if he is not covered by payment of gratuities act. Is this clear? Or should I explain it again? Hello?
Huh?
Yeah.
Not covered by gratuity aspects.
Okay. Gratuity exemption. So we'll just take it up for other employees alone.
Sir, can you just for 1 second go back to the previous?
Which one, boss? This one?
Previous.
This one, boss?
No, sir. Previous slide, like flowchart of POGA.
That
One
is
second.
this one.
Yeah. 1 second, sir. Sir, can you once tell me the covered by POGA part, sir?
Yeah, I just
Based on
explained that. Yeah. So the other things are done. So I'll just explain this. If he is other than government employee, I'll just explain here. Okay.
Okay.
If the employee is other than government employee. So this, it is broadly classified into is covered by payment of gratuities act, not covered by payment of gratuities act. If he is covered by payment of gratuities act, list of the following is exempt. First is gratuity received. Next is 20 lakhs. Okay. So the third point is 15 days salary for every completed year of service. Okay. So if you just want me to give it as a formula, I'll just put it this way: 15 into 15 by 26 into.
Sir, are you showing something on Excel?
No, on OneNote. Hopefully that is visible.
No, sir. We can see the flowchart on this.
Okay. Is it now visible?
Yes, sir.
It is 15 by 26 into last drawn salary into completed years of service are part there. Right. If the employee is covered by payment of gratuities act, list of the following is exempt. The first one is gratuity received. Next is 20 lakhs. Third is 15 by 26 into last drawn salary into completed years of service are part thereof. If he is not covered by payment of gratuities act, again the same thing, list of the following would be exempt. Gratuity received 20 lakhs. So either both of these things are common for point number A and point number B. However, if we just go for point number C, half month salary 1 by 2 into average salary of 10 months into completed year of service. Alone will be here. So the major difference between if an employee is covered by payment of gratuities act or not covered by payment of gratuities act will be there only in point number C. Right. So if you just see here, we'll just take 15 by 26. 15 by 26 is nothing but half a month's salary only. But here in payment of gratuity sack, they will just consider 26 days as the number of working days. So if you just put 15 by 30, it will become 1 by 2. That 1 by 2 is only here, right? However, in payment of gratuities act, they take 26 days as number of working days. Here they take 30 days as number of working days, right? Here they'll just use last drawn salary for the purpose of computation. Now, if he is not covered by payment of gratuities act, we'll use average salary for the last 10 months of which he was in employment. And the third thing is, here if you just see, for every completed years of service, part thereof in excess of 6 months should be taken as a year. However, here you will just take only completed year of service, and this R part thereof in excess of 6 months is not available if he is not covered by payment of gratuities act. Clear? Hello?
Sorry.
Yeah.
So basically, in the first case, when it is covered by POGA, Payment of Gratuity Act, the third condition, by saying that part thereof in excess of 6 months, they mean to say that if there is a decimal involved, you're rounding it off, right? For 27, 27, sorry, yeah,
See, if it is
27.5 years means
very
28
simple.
years.
If it is 27 years, 8 months, for the third component, I will take 28.
Yes, sir.
Okay. Here, if it is 27 years, sorry, 27 years, 8 months. Here, if it is 27 years and 8 months, I'll take just 27. Okay.
Yes, sir.
So this is the difference between A and B.
Sir, if there is 27 years, 2 months.
27 years, 2 months, both the places it will be 27 only.
Okay.
Is it clear for each and every one of you?
If it exceeds 6 months, then it will be rounded after the next year.
If it is covered by POGA.
Oh, okay. Sir.
If it is not covered by POGA, it will not be rounded. So you will just take the whole number alone. Okay. So shall we solve some questions in this regard?
Yes, sir. Will we be doing one more topic after gratuity, sir?
I didn't get you.
After gratuity, will we do another topic also, sir?
Yeah, basically we are just in the second part. We just have 4 more subtopics. Is there a problem?
No, sir. Just ask.
Yeah. So would you want a break? Some 5 minutes? We'll just take the question. We'll just plan it up from there. Right. So you just want an easy question or a comprehensive question covering everything. So first we'll do one thing. We'll take up an easy question covering only POGA, gratuity exemption. Then we'll take up a wholesome question, right? Yeah. Yes, Reshma, read the question.
Yes, sir. Mr. Lyon, who was in employment for 29 years and 9 months, due to his age, he retired from his job and received a gratuity of 60 lakhs. The salary structure was as follows. During the beginning of the year, his salary, that is basic plus DA plus commission based on a fixed percentage of turnover, was rupees 95,000. In the month of September, his salary, that is basic plus DA plus commission based on a fixed percentage of turnover, was revised to 1.25 lakhs. Compute the amount of gratuity taxable if case 1, he is a government employee and covered by POGA. Case 2, he is a non-government employee and covered by POGA. Case 3, he is a non-government employee and not covered by POGA.
Okay. The question is clear. See, the question is simple. I just want the answer by, it is 8-7. By 8:17, we'll just discuss, right? Max 10 minutes. So as far as gratuity is concerned, if it is received by a government employee, we have already seen that it is fully exempt, correct? So the amount of taxable gratuity if he is a government employee is nil. Since in case of government employee, the entire amount is exempt from tax. Next, if he is a non-government employee and covered by POGA. Covered by POGA. What is the conditions? Least of the following is exempt. What are the three things? First one is gratuity received. Second one is 20 lakhs. What is the third one? Hello?
Yes.
15 by 26 into last drawn salary to completed years of service or part thereof in excess of 6 months.
Completed years of service or part thereof. Okay. So what is the total amount of gratuity which is received? 60 lakhs, right?
Yes, sir.
20 lakhs, the amount is going to be the same. Now we just have to do this. 15 by 26 into, what is the last drawn salary?
1,25,000.
1,25,000 into completed years of service or part thereof. So basically it is 29 years and 9 months. So you should get 30, correct? Correct? Hello?
Sir, your voice was stuck in the middle.
Now is it better?
Yes, sir.
Yeah. So basically it is 15 by 26 into last drawn salary into completed years of service or part thereof. Right. So 15 by 26 is done. Last drawn salary is 1.25 lakh, 1,25,000. Then it is completed years of service or part thereof. So basically it is 29 years and 9 months. So which basically means you should multiply it by 30. Correct?
Yes, sir.
Okay. So what is the amount which is exempt? Minimum of these three. Amount exempt from tax. So what is it what is asked in the question? Is it
Taxable,
amount
sir.
exempt or is it amount taxable?
Amount taxable.
Amount taxable. Gratuity received is 60 lakhs. I'll just put it here itself. Amount taxable is equal to 60 lakhs minus the amount which is exempt from tax, which is basically 40 lakhs. Correct? Next is non-government employee not covered by POGA. List of the following is exempt from tax. Number 1, gratuity received. B is 20 lakhs. C is 1/2 into average salary into completed years of service. So gratuity received is same, 60 lakhs. 20 lakhs is going to be the same, 20 lakhs. Now what we should find is average salary of last 10 months. So what is the average salary for last 10 months? So basically he's in employment for 9 months, right? Is my voice clear?
Yes, sir.
He is in for 9 months in the current year. So basically in financial year 2021, 22 to 23, he is in service for 9 months. Correct? Was in employment for 29 years, 9 months. Due to this age, he retired from his job and received a gratuity of 60 lakhs. His salary structure was as follows. During the beginning of the year, his salary was 95,000. So basically on April, it was 95,000. So just to, if you just see, he is in for financial year 22-23, he was in employment for 9 months. So April, May, June, July, August, September, October, November, December. So till December, he was in employment for financial year 22-23. 21-22 ல இருந்து ஒரு மாசம் எடுத்தணும். So basically you will be getting 10 months. So 22-23 ல you should be taking it from April to December, and 21-22 ல you will be taking the March month salary. Correct? So what is the salary of the month of March? 95,000. There is no other word, that is the only number we have. Right? So in the beginning of the year, salary was 95,000. April, May, June, July, August, September. April, May, June, July, August, September. 6 months for which his salary was 95,000. Plus October, November, December. So 3 months into his salary was revised to 1,25,000. So this is the entire salary for 10 months. So we are just going to make an average.
In the month of September, we got the revision in salary of 1.25 lakhs. Right? So
yeah, so if it is in the month of September, from October his revisions will be there, correct?
on the month itself. Okay, so it's this assumption. Okay.
Yeah. So that should not be a big issue, right? So the concept here is, it is two things is the concept here. So the last grant salary, the average salary is 1,04,000. Average salary for 10 months is 1,04,000. So what should I do now? 1/2 into average salary into every completed year of service. What is the total number of completed years of service?
29.
29. So exempt is minimum of the above. So 15 lakhs 8,000 is exempt. Taxable gratuity will be 60 lakhs minus 15 lakhs 8,000, which is going to be 44 lakhs 92,000. So Reshma's answer is correct. Super.
Thank you, sir. Sir, I have a doubt here.
Yeah.
And that not covered by BOGA, the third condition, they are talking about the average salary of 10 months. So is it preceding the should it be preceding the month of the retirement, or should we also consider the retirement months?
Yeah, actually it should be from before retirement only. Right.
Suppose if he is retiring in the month of September means, so it should be, you have to consider from August.
Yeah, perfectly. From August till the August will be the 10th month. Have it there. Okay, clear?
Yes, sir.
So, yeah, is it okay? So we'll just take up the next question now.
Sir?
Yes?
So even for the purpose of gratuity, the definition of salary is same as that of HRA.
Yeah, I've just not touched upon it. So I'm just having that in my discussion. So it is in my next discussion. So I've not covered it intentionally. I just want you to get some used to certain things, and then I'll just introduce you there. Right?
Yes, sir.
Else we'll do one thing. We'll just finish that and we'll come back here. Yeah. So as far as the gratuity part is the recording is moving. So as far as the gratuity part is concerned, see, we just need to have some discussions before going to the further steps. So assume, for example, do you today see any person who is employed with a single employer for his entire life? Precedingly, it was possible, but now it is not possible. And it is not, I won't say it is not possible, but many are not preferring it, is what I'll better say. Because primarily for one reason, that in the public sector company, it is very hard for you to stay in a single employment for 30 years or 40 years, as the case may be. Right. So generally what will happen is, in the lifetime of every employee, there might be 2 or 3 employees. If you just see, for every year of service or completed year of service, you just need to multiply. So that completed year of service would not only mean the completed years of service with the present employer, but it also mean the years of service which was served for the previous employer also. Right. Assume, for example, you are in MRF for 5 years. You are then shifting to a big 4 company. Then you are again shifting to a public sector company, 5 years. So basically, your completed year of service at the time you are receiving a gratuity would be 15 years, 5 plus 5 plus 5. Right. So that is the first point. And this was held in CET versus Mehra case. So the next point which is to be discussed is, if you just see here, this 20 lakhs amount is there, right? This 20 lakhs amount is a lifetime exemption for gratuity. If you are going to receive gratuity 2 or 3 times in your life, right? This 20 lakhs is not to be taken for every time when you are getting a gratuity. Only once, that is for your entire life. This is the exemption which is given by the Income Tax Act. The minimum amount is 20 lakhs. Assume, for example, in the year 15-16, you just received a gratuity and already an amount of 15 lakhs is exempt. In that case alone, the second point is there, right? you should not have it as 20 lakhs. You should have it as 20 lakhs minus the amount which is already exempt. Clear? So let me put it again. So for some issues in relation to gratuity, first is the completed year of service will not only mean the service which you have rendered with the present employer, but it would also include the service which you have done with your previous employer. That is the first point. Second point is, if at all you are receiving gratuity exemption from more than one employer, in such case, the 20 lakhs is the lifetime exemption, and if at all any amount is already been claimed as exemption, that amount should be reduced from this 20 lakhs. That is the second point. Then the third point in relation to salary is the definition of the term salary. As far as the definition of the salary is concerned, if at all you are covered by payment of Gratuities Act, your salary would mean basic plus DA. But if you are not covered by payment of Gratuities Act, it will mean basic plus DA plus commission based on fixed percentage of turnover. Already we have seen two differences. One is between POGA and not a POGA. If you just go back here, we have just seen two differences. Here you will take, if it is covered by POGA, you will take 15 by 26. Here you will take 1 by 2. Next, you will be using your last drawn salary in POGA. You will be using average salary in not covered by POGA. Then here it will be, if at all it is for more than 6 months in a year, you will just include it. But if it is not covered by POGA, you will not include it. You will just take completed year of service. The fourth difference between covered by POGA and not covered by POGA is the definition of the term salary. If you are covered by POGA, the definition of your salary will be basic plus DA. But if you are not covered by the definition of, if you are not covered by payments of Gratuity Act, your definition of salary would be basic plus DA plus commission based on fixed percentage of turnover. Right. So this is these are few things which you should remember while you are computing the problems in relation to gratuity and its exemption. Right. So we'll just solve a problem in this respect now.
Sir.
Yes.
Sir, and the second point, example
In the point, ma?
20 lakhs.
See, romba simple. Which screen is visible now?
PPT.
Yeah. So these are just assumed numbers. Okay. So what happens is you are in an employment. In previous year, in 18-19, what you say is I'm just terminating myself from the employment and you're receiving a gratuity payment of 13 lakhs, 23 lakhs. Of the 23 lakhs, 13 lakhs is exempt from tax in that year. Okay. Which is in assessment year 1920. Then in the current financial year, that is 22 to 23, you have received a gratuity of 45 lakhs from your second employer. So this is from the first employer. This is from the second employer. Gratuity of 45 lakhs. So you will be computing the exemption, right? So the part A will be gratuity received. Amount B will not be 20 lakhs. Instead of 20 lakhs, it will become 20 minus 13 already exemption is claimed. So it will become 7 lakhs. Then the third part of the computation will continue.
Yes.
Okay, wow.
Yes.
Is it clear?
Yes, sir.
Okay. Just give me a minute. I'll just give you a problem. Is somebody? Roja, read the question.
Sir,
Hello. Question padi ma'am.
Mrs. Banu is the employee and is in employment based on the following schedule. Financial year 2002 to 9, first employer. Financial year 2009 to 14, second employer. 2014 to 23, third employer. She was an employee of higher cadre and had the following salary structure at the beginning of the year. Particulars amount and month: basic 1.2 lakh, dearness allowance 25,000, education allowance 6,000 per month for one child, HRA 25,000. She was living in a rented house property in Mumbai where the rent was 65,000 per month. In the month of August, that is, salary receivable from the month of September, occasion of she achieving a new milestone on the share price salary. Her salary structure was revised as follows. Particulars amount and month: basic 1.8 lakh, dearness allowance 35,000, education allowance 7,000 per month for one child, HRA 40,000. Due to high pressure to achieve new high in the month of March, she felt to quit the job on health reasons. On December 31st, she terminated herself from the job. She was entitled to the pension scheme of the company where she was to get a pension of 95,000 per month. However, she commuted 60% of her pension for 48 lakh. She received a gratuity of 60 lakh from the company. She has received a gratuity from the second employer of 32 lakh and an amount of 16 lakh was exempt in the year. Using the above information, compute the income taxable under the head salary. If she is covered by POGO, she is not covered by POGO.
10 minutes.
Okay, sir.
Yeah. So we have completed till the discussion on gratuity. So the question on the sum which was given on gratuity, we'll just keep that in abeyance for some time. We'll just discuss few other topics. We'll get back to the sum after some time. Right. So the next topic of our discussion, we'll just go back to our initial slide. So the salaries chapter was broadly split into two: allowances, retirement benefits, and then the perquisites. So now we are in the part of retirement benefits, of which pension is done, gratuity is done. Now we are just going to take up the case of leave encashment, retrenchment compensation, and voluntary retirement receipts. We'll stop there for the day. Tomorrow we'll take up the case of provident funds along with the next aspects of perquisite valuation. Right. So we'll just take this up now. So after dealing with gratuity, the leave salary is basically nothing but, see, every employee will be given somewhere around 1 or 2 leaves on a monthly basis. If at all you are in, it is based on discussions generally. But whatever is the capability, generally in governments, it will be 1 or 2 months. 1 day per month or 2 days per month will be the actual norm. So they can, it is known as paid leave. You can take that leave, but the amount will not be deducted from your salary. However, if you have not taken that leave and you have worked in that day also, as if for example, for every month you are given 1 day of leave, and you are not taking that leave and you have worked for 12 extra days, right? So those 12 extra days of salary should be given to you. So every employee is entitled to something called as paid leave, which may be 1 day or 2 day per month. It can also differ based on the agreement between the company and the employee, but generally it is 1 day or 2 day per month. If at all you are just not going to take that leave, right, what will the company say is, they'll say, I'll reimburse you for the amount of leave which you have not taken. Assume, for example, if my monthly salary is 3 lakhs, and which will basically turn to 10,000 per day. So if I'm just going to work 12 extra days in a year, I'll be entitled to get 1.2 lakhs extra. Right? So that amount which I'm going to receive for me not taking the leave is known as the leave salary. So leave salary can generally be taken in two parts. One is it can be either you can either get it during the service, or you can encash it at the time of retirement. It is the option is available with the employee only. So whatever leave salary which are encashing during the service is fully taxable, irrespective of whether you are a government employee or a non-government employee. However, if you are getting that at the time of retirement, then the treatment will differ based on whether you are a government employee or a non-government employee. If you are a government employee, as always it is done, the entire amount of leave salary which you have received is exempt from tax. However, if you are an employee who is not a government employee, then least of the following will be exempt, of which the amount leave salary will be the first thing. Leave salary received. Next is 3 lakhs. Then 10 months salary on the basis of average of 10 months salary. Then leave due into average salary per month based on 10 months average. And leave due per annum, which cannot exceed 30 days per annum. See, leave, I'll just put it again. List of the following amount will be exempt from tax. First is leave salary received. There is no doubts regarding that. Next is the amount of 3 lakhs. There is no doubts regarding that. The third point is, at the time of retirement, your leave salary should not exceed your 10 months salary on the basis of average of the last 10 months salary. Okay. So basically what would that mean is 10 into average salary. Basically it will be your past 10 months salary. Okay. 10 months salary on the basis of average salary of 10 months. So basically your last drawn salary for the past 10 months will be the answer here. Okay. So it will be like 10 into 10 months salary divided by 10. So it will be nothing but this 10 and 10 will cancel itself, and your 10 months last 10 months salary will be the amount here. It will be last 10 months salary. Right. So that is in relation to the third point. Is the point till 3 clear?
Yes.
Hello.
Yes, sir.
So we should just now look at the point number 4. If you just look at the point number 4, leave due will be basically the number of days where you have not availed that leave. See, for example, you are eligible for 1 day of leave per annum. Sorry, per month. Okay. So basically for an year, you can take 12 leaves. So you are in service for 20 years, which basically means you have 240 days of leave entitlement, of which you have taken 120 days. So this remaining 120 days is your leave due. Okay, Vam? Is it okay?
Yes.
Sir, can you repeat it, sir?
Yeah. See, very simple. You are eligible for 1 day of leave per month. Okay?
Okay.
So for 12 months, what is the number of days you are eligible for leave?
Well, sir.
12 months. You are in service for past 20 years.
Okay.
Okay. So what is your total number of leave entitlement?
240.
240. Of which you have taken 120 days of leave.
Okay.
So what is your leave due today now?
120.
Now this is that is the number of days you have not taken the leave. Correct?
Correct.
Yeah. So the next point is this 120 should not exceed. It should not exceed 30 into your number of years of service, which is basically 600. Your leave due cannot exceed 30 days per annum. Okay. So if it is more than 30 days per annum, what you should do is you should restrict it to 30 days per annum. Okay, first point clear. Leave due. Leave due is your total leave entitlement minus your leave availed. So your leave due cannot exceed 30 days per annum, which basically means if you are employed for 20 years, 30 into 20, it cannot exceed 600 days. Okay, is this point clear? Hello? Hello? Am I audible? Hello?
Sir,
Am I audible? Am I audible? Is it clear for you? I'm not unfortunately able to hear anyone. Just give me a minute.